Hello and welcome back to Chapter 10 Notes, and so we're going to continue on where we left off on the schedule of cash collections. So we say over here, this refers back to our sales budget. We say how much cash will we collect in each month and in the quarter if we assume the following right over here. We make all sales on account. So what that means is each time we make a sale, rather than debiting cash, we will debit accounts receivable, credit sales. The company collects 70% of sales in the month of the sale. So that means they would collect 70% of June sales in June. They collect 25% in the month after the sale. That means they would collect 25% in June sales in July. 5% of sales they're never going to collect, and you may or may not remember that this is called bad debts expense, okay? The accounts receivable balance on March 31st was $30,000, all of which was collectible. Okay, so we will collect that. This is the end of quarter one, which becomes the beginning of quarter two. Okay, so what I have over here is a schedule of cash collections, and setting up this little table like this will help us to answer how much cash are we going to collect each month and for the quarter, and also what is the accounts receivable balance at the end of a given month and also at the end of the quarter. Okay, those are the questions that we want to answer. So if you look over here, I'll say my accounts receivable balance at the beginning of quarter two is $30,000. It says right over here, accounts receivable at the end of quarter one. Now I'm just going to adjust this video a little bit right over here because I can tell it's having a hard time adjusting. So I'm just going to make it a little bit smaller and see if that helps. Okay, it's still a little bit blurry. Okay. I'm going to exit and come back. Sorry. Okay, that's better. So let's try from there, okay? So with schedule of cash collections, we have our April, and that's $30,000 right there. Okay, $30,000. We collect that in April. And it says right over here, April sales collected in April. Okay, what are April sales that are going to be collected in April? Well, we're going to collect 70% of April sales. April sales are $200,000, so that means we'll collect $140,000 of April sales in April. And then, of course, April sales collected in May would be 25% of that $200,000, which is going to be our $50,000. And then, of course, we don't collect any of May or June in April, so we can look over here at the end of April and say, what is my total cash collected for April? It's $170,000. Now, the other thing that I want you to understand is what is ending accounts receivable for April. So if I did a balance sheet at the end of April, what would be my net accounts receivable balance? And when I say net accounts receivable balance, what I mean is after the allowance for doubtful accounts, which relates to bad debts expense. So basically, not including this 5%. Okay? So basically, the ending accounts receivable for April is $50,000. Because if you think about it, April I had sales of $200,000, and how much of that $200,000 have I not collected at the end of April? $50,000. I know you could do the math and say, well, it's $60,000 because it's $200,000 minus the $140 gives us $60,000, but I'm saying net accounts receivable. So regardless of this 5%, I don't care about that 5% because I'm never going to get it, so I can't count that. Okay? So how much accounts receivable do I have at the end of April? It's $50,000. Okay? So we look at May sales. So I'm going to continue on. May sales, $500,000 times 0.7 gives us a $350,000. We're going to collect our $400,000 right over here in May. And then we do the same thing. May sales collected in June would be the 25%, which is $125,000. And then, of course, we have 70% of June sales collected in June, which is the $210,000. 70% of the $300,000. We add these two, we get $335,000. And then we can add across to get the total for the quarter, which is $905,000. If I wanted to know accounts receivable, AR, at the end of quarter two, What I'm really asking, this question is really asking what is accounts receivable at the end of June, okay? Because the end of quarter 2 is the end of June. So like I took a picture at the end of June, which is the end of quarter 2, and what is my outstanding accounts receivable? Well, it's basically 25% of June sales, because that's what I haven't collected yet. So I could come over here and I could go 300,000 June sales times my 0.25. That gives me $75,000. That's my ending accounts receivable for quarter 2, which is the same as ending accounts receivable for June. Okay. All right, so that's our schedule of cash collections. Now, let's look at our production budget. Okay. So our production budget doesn't have any dollars. All it shows us is how much we're going to produce each month and for the quarter. Okay. So this is dependent upon sales. So what we're saying over here is this is our formula to figure out how many units we're going to produce. It's going to be equal to how much we think we're going to have in sales plus our desired ending inventory minus what we already have left over. So this is kind of like saying, well, if you think you're going to sell 50 cups of lemonade on one day, but you know what, just in case, you want to have an extra 10 cups of lemonade. Yeah, you think your sales are going to be 50, but just in case you want to have extra 10, just in case sales are higher than 50. So that means you have to have 60 on hand, right? But then let's say that you have 5 cups left over from yesterday that you can still sell. So how many cups do you have to make today? You have to make 55, right? Because you can sell 50, and then you want to have 10 left over just in case. Minus 5, what you had left over from yesterday, okay, means that you have to make 55. We're going to take that exact same line of reasoning and apply it to this situation over here with our master budget, okay? So we look back over, we say budgeted sales in April. This is the whole production budget is in units, 20,000 units. Okay, we're going to sell 20,000 units in April, 50,000 in May, 30,000 in June, and then and then July. We need July over here. We think we're going to do the 25,000. Okay. Then it says right over here, the company wants to have inventory on hand equal to 20% of the next month's unit sales. So next month, for April, the next month is May. And unit sales for May are 50,000. So I want to have 20% of May sales at the end of April, just in case I sell more than I thought. I don't want to have a stock out. Okay? So that means I take 0.2 times the 50,000. That gives me 10,000. So my total needs are 30,000. Now it says up here on March 31st, there are 4,000 units that were still on hand. This is the end of quarter 1. The end of March becomes the ending inventory for March 31st becomes beginning inventory on April 1st. Just turn the clock 1 minute forward. Okay? So that means I have 4,000 on beginning on April 1st, which means now I only need to make 26,000. Okay? Looking over here at May, we take the 30,000. I need to have 6,000 right over here, the 20%, 56,000. Now, what is beginning inventory for May? It is ending inventory for April, because this is April 30th at 11:59 p.m. You turn the clock 1 minute forward. That becomes midnight, May 1st. That's beginning. It's the same. Okay. So now what we have to do is we have to make, and this is the 6th. You have to make 46,000 units in May. Repeat the same thing for June and July. I'm going to go a little bit faster here. 5,000, 35,000. That 6,000 comes over here, which means we need 29,000. And then we'll go ahead and do July. So in order to get July, you have to take 20% of August, which is our 3,000. 28,000 there. That 5,000 comes over here, which means we have to make 23,000 right there. Okay? Let's go ahead and look at the direct materials budget now. Okay? So the direct materials budget depends upon the production budget. Okay? So now that we've done the production budget, now we can do our direct materials budget. And what we say, we have to have some assumptions, especially about how much direct materials does it take us to make each unit. Okay? And so it says right over here, 5 pounds of materials are required to make per unit of the product. Management wants to have materials on hand at the end of each month equal to 10% of the next month's production needs. So this is similar to like what we did with that production budget, where we want to have some left over just in case sales are more than we thought. Beginning materials inventory was 13,000 pounds, and the cost is 40 cents per pound, and the exact same formula as what we did with our production budget. So now what we're going to do is we're going to complete our direct materials budget. And you can see required production comes from right over here. Okay? So required production for April is 26,000, May is 46, 29, and so on and so forth. Okay? So we say over here, 26,000 for April, and we have our 46,000 for May, and then we have our 29,000 for June, and then we have our total of 101,000 right over here. Our raw materials per unit requires 5 pounds of raw materials for each unit, so times 5 across the board like that. Okay, and so that gives us our production needs of 130,000, 230,000 right over here, 145,000 right there, and then 505,000 right there. Okay. My desired ending inventory. Well, it says I want to have 10% of the next month's following production needs. Well, the next month for April is May, and so the production needs for May are 230. And I want 10% of that, 23,000. So that means my total needs, and this is in pounds, right? This is units, and then I multiply it times 5 pounds per unit. This is pounds, this is pounds, this is pounds. I don't mean pounds of currency, as in England. I mean pounds of raw material. Now it says right over here, my beginning materials inventory was 13,000. So my required production for April is 140,000. It says over here, my cost per pound is 40 cents times 0.4. That gives me the cost per pound of $56,000 right there. Okay? And then I'm going to repeat the same process over here for May, 14,500. And then, of course, I have to take I calculate my 11,500. And the way I got that is I took my 23,000 units produced for July, multiplied times the 5, and multiplied times 0.1. That gives me the 11,500. I add down here, I get my 244,500. And just like before, the ending becomes beginning, 23,000. 221,500 times the 0.4 gives me my 88,600. And then what I have, I can add down over here. I get my 156,500. That's my total needs in pounds. My ending for May becomes my beginning for June, 14,500 right there. And then what that gives me is required production. Really, and this is really required purchases, right? Required purchases of materials. Okay, times 0.4 means the cost is my 56,800. Okay. Now I can fill it in for the quarter. My desired ending inventory for the quarter is the same as my desired ending inventory for June, because June is the end of the quarter. Then I add down, I get my 516,500. My beginning inventory for the quarter is what it was at the beginning of April, 13,000. Okay, then I subtract the 2. That gives me my 503,500, and I multiply that times 0.4, and that gives me my 201,400. To check your math, what you can do is add these 3 and make sure you get the 201,400, which you will in this case. Okay, this concludes this lecture video. The next one will continue on where we left off. Thank you.